Hello and happy Wednesday, everyone. Today is January 11th, 2023. It is midweek, and I wanted to stop in here to try to give a quick update right before we approach the CPI data report, which comes out tomorrow. And another reason I want to stop in here is that come this weekend, I will be out of town, so I wanted to stop in here now and give a brief market update. So I want to start out here with the VIX. And what I'm looking at right now on the screen is a 1-year daily chart of the VIX. And I want to point out something. And since we've been in this bear market, overall, look at the wider and the bigger picture of the VIX. It has been attempting, if I was to pull this up on a weekly chart, you will see it better. But it's been attempting to try to continue to gather support at a specific level on a longer term upward trajectory. So the VIX overall, if you look back about a year, you'll see that this has been a longer term upward trajectory. We were as low back in November of 2021. Let me show you guys this. Back in November of 2021, the VIX got as low as right around, even before that, right around October. It's around October the 20th, 2021, the VIX got as low as $15. That's how low the VIX was. And since then, every time the VIX has pulled back, every time the VIX has rallied and pulled back, it has not revisited that $15 low. In fact, it has been finding a way to create these higher lows. So right here around October of 2021, when the VIX pulled back to around $15. Rallied, then right around here, around January the 4th, 2022, the VIX pulled back to 1646. Then we rallied for a bit, and then right around April of 2022, VIX pulled back 1848. Then rallied again. The VIX rallied again, and then started to pull back around June, pulled back to as low as 19. It's like $19. Where are we at now? VIX rallied again, then a nice long pullback starting in October of 2022. This time we got down to as low as 1886. And look what the VIX is now, folks. It has been in this tight range, as I told you guys last week. It has been in this tight holding pattern. It's been in this tight holding pattern and remaining above all of those lows that I just mentioned to you guys. So the VIX has been in a tight holding pattern, holding above all of those lows, well above that $15 low that it's seen created back in October of 2021. VIX got to as low as about $19 again. And we are right back at this support line again, folks. Right back at the support line again, right before a major CPI data report. So we're nowhere near the highs that the VIX have seen. We're back at the lows. So needless to say, if for some reason the market doesn't find a way to rally in a big way and drop the VIX below this trend line, we will probably eventually see a sustainable bounce from this area of the VIX in the near term. So keep that in mind. So for a whole year, folks, for a whole year, the bulls have been unable to push the VIX below this trend line, and we are back visiting this trend line again. So if they haven't done it in a year, what makes me think it's going to happen now? We're still in a bear market, so I think the VIX is going to find a way to eventually bounce from this area of support, or this range trading area. Okay. So I wanted to point that out, highlight that we are back at the bottom of the range for the VIX, and we have not dropped back to the lower spectrum. If the VIX was dropped well below 18 bucks, then that would be a good sign for the bulls. All right, so keep that in mind. Now, and plus the market is up today, and the VIX is up over 2%. So that's another thing to keep in mind. Now let's look at the Dow Jones futures and point out something here too, something to pay close attention to as we go through the rest of the trading day and we head to the CPI report tomorrow, and as we start earnings on Friday with the big banks. So the VIX has been, I'm sorry, not the VIX, but the markets have been rallying the past couple of days. And I told you guys previously that there's some overhead resistance as the market continues to rally. And I highlighted a few levels. So if markets continue to rally, we're right up to another level of resistance right now in all the major moving averages. That 34,000 level, we have reached it. And I told you guys to watch out for that 34,000 level on the Dow Jones futures, because if we hit that level, that is a major level of resistance. Now, what the bulls really want to see is a big push through this 34,000 level, so we can head back up to 35,000. Will it happen? I'm not 200% sure. The VIX will really have to participate and drop drastically. And right now, as I just showed you guys, the VIX is holding steady. So we have finally reached the 34,000 level on the Dow Jones futures, which was a level that I was watching and said that we could possibly rally up to that point. Now, as price action has been rallying or rising on the major indices, I say keep an eye on volume too, because volume gives us a pre-indication of how further this rally could run. Look at the volume here. See these volume bars down here? You guys see what's happening? As price action is rallying in the markets, the volume is steady declining. For a sustainable bull rally, sustainable bull market, they want to see this continue to, rally in a big way. As we're getting the big rallies in the market, we want to see volume rallying right along with the markets, but that's not happening. For the past several days, as the market has been rising, volume has been declining. So that's something to pay close attention to as we go through the rest of this week and we get that CPI print tomorrow and we start to see the big banks start to report on Friday. And now with that said, looking at the Dow, I can go straight down the list, folks. And I can guarantee you that each one of these indices will show the same type of action. Here is the S&P futures. Again, we have rising price action over the past several days. After we hit a level of support, back through another level of resistance on rising price action with declining volume. That's not what the bulls really want to see. They want to see rising prices along with rising volume. And if we take a look at the NASDAQ futures, we're going to see the same rising price action with declining volume. And still, reminder, rising price action with declining volume in a bear market. One thing I forgot to point out, we're still in the bear market. We're not in this bear market yet. And this one is even more defined. We had rising price action for several days in the NASDAQ, bouncing off of a level of support, getting that nice bounce past several days and approaching back up to a level of resistance with declining volume over the past several days. So you got rising price action, declining volume. Hence, that's not what the bulls want to see for continuation. If this is a strong new bull market or new bull run, or head into a new bull market, you want to see the opposite. You want to see rising price action along with rising volume. That's not the case. And each one of these looks the same. Even if you look at the Russell 2000, nothing different. Russell 2000 futures, same thing. Rising price action, heading back, getting very, very close to that downward trending channel line, upward trending downward trending line, trend line, very close to it. As price action is rising, the volume is dropping, and we are getting very, very close to a stronger, even a stronger area of resistance. So I said that to say, pay close attention to these markets, especially the rest of this week, as we see a CPI data print tomorrow and beginning of earnings on Friday. And just keep in mind where price action is right now. Nice strong rally over the past several days, maybe the past week. But keep it in perspective, because the VIX, folks, if the VIX does not participate with a major drop below the level of 18 bucks, who knows? Because again, here's our yearly chart of the VIX. You see the action. As low as we have gotten back in October 2021, 15 bucks. We have not even thought about approaching that level since then. Since then, every time the VIX pull back, it creates another higher low. Okay, so now now with price action rising, the VIX have been stagnant in this tight range, still above a major support level. So eventually, something's going to have to give. Either the VIX is going to fall out, or the box drop down below 18 and continue to go lower. Then we start a new bull market, or eventually the VIX is going to break out of this range, start to trend higher, and the markets will start to falter again. So pay close attention to that, folks. Again, markets are up. VIX is up right now, 2.14%, 2.14%. Think about that. The VIX is up, market is up, as the VIX is still actually grinding in a area of right above an area of support, with the markets raging higher, but on declining volume each day. That's a recipe for a big reversal in the markets. Let's put it to you that way. That's the recipe for, right before data dump and beginning of earnings. So keep that in mind. And one more thing I want to point out, while we're at it, we might as well take a look at a longer term chart of markets, and let you guys know what to really pay close attention to. And I am going to try to dress this up just a bit. So this is a monthly chart of the Dow Jones futures. Here is the month of January that we're in now. Here's the month of December. See, the month of December was a red month. The month of January is fighting back, trying its best to keep this month ring. But I'm telling you guys, if for some reason that bulls can push price action above the body of this of the December candle, markets could be in store for a bad February and maybe even a bad January. So we want to see how this candle that we're in now trades for the rest of this month. Speculation is possible that this green candle could turn red and start to push lower again throughout the rest of this month. I mean, throughout sometime this month. So what the bulls ultimately want to see is for price action not to drop below this wick that the month has started, or this price action that the month has started in the green. If we drop below this level of support before the month is out, and this candle's going to end up turning red, and we're going to probably have a very, very bad end of this month. So we got to see how the things pan out. We're still, why not even halfway through this month yet. And the price action has been strong, but everything that I pointed out already shows that we could see a change. We could see a change in the way price action is moving. So keep in mind, big strong rally right now. I mean, a big strong rally right now before CPI data print dump. And look at this again on a daily chart. Again, Dow Jones futures now well above 34,000. Look at that, 34,033. So we're well above 34,000, which is a good sign for the bulls, but not so great because we are doing it on decreasing volume with VIX still up about 2%, and still in a tight range. All right, that's all I had to offer for you guys for this midweek review. Enjoy the rest of your week, folks. Again, pay close attention to what happens tomorrow and how the earnings season starts. And if I don't catch up with you guys this weekend, I'll catch up with you guys sometime next week. Enjoy the rest of your day and enjoy the rest of your weekend that's coming up.